Did you realize that if this occurs, Tesla stock can surge? The financial business knows very well that a single incident can cause a stock to rise or fall. Keep an eye out and stay tuned to see what could happen next that could send Tesla's stock skyrocketing. Like other companies on the market, Tesla stock has grown more unpredictable in light of the numerous global shifts that have an impact on the economy. However, there are also foreseeable shifts brought about by individual and slash or governmental decisions. You will learn what is anticipated to occur today and why this could cause Tesla stock to surge. Senator Joe Manchin of West Virginia and Senate Majority Leader Chuck Schumer came to a hundreds of billion-dollar deal at the end of July to reduce the cost of prescription drugs, increase taxes, fight climate change, and make investments in renewable energy. A key component of Joe Biden's first-term program, Build Back Better, was a major domestic spending package that is represented by a scaled-down version of the bill. A 15% corporate minimum tax, the Internal Revenue Service's enforcement of prescription drug pricing reform, and the closure of the so-called carried interest loophole, which permits partners in private investment funds to have their income taxed as capital gains rather than ordinary income, are some of the ways the legislation would raise money. It would spend $64 billion on extending the Affordable Care Act's subsidies and $369 billion on energy security and climate change initiatives. It's the action that the American people have been waiting for, according to U.S. President Biden. This addresses the problems of today: high healthcare cost and overall inflation, as well as investments in our energy security for the future, he stated. He continued, if this legislation is enacted, it will be historic. The Inflation Reduction Act of 2022 is a measure aimed at fighting inflation, fighting deficits, investing in local manufacturing and energy production, and reducing carbon emissions by around 40% by 2030. The anticipated total revenue raised, if this proceeds, is around $739 billion. This sum is the result of $313 billion in corporate minimum tax at 13%, $288 billion in prescription drug price reform, $124 billion in IRS tax enforcement, and $1 billion in carried interest loophole closure. That comes to a total of $739 billion. An estimated $433 billion will be invested in total, of which $369 billion will address energy security and climate change, and $64 billion will fund the expansion of the Affordable Care Act. A successful passage of the measure might serve as a major impetus for all EV manufacturers. There might be concerns right now about how the aforementioned bill might impact and influence the EV sector. What is the electric vehicle tax incentive, and what effect will it have on the market for EVs? What are the benefits and drawbacks of an EV tax incentive, and how would it affect Tesla in that regard? There is a dedicated section for the EV tax credits in the more than 500-page measure. Remember that when the law moves through various agencies, certain parts are sure to alter. There will be a $7,500 tax credit for new electric vehicles and a $4,000 tax credit for used EVs, according to the information that is currently available. Of course, there are requirements and other considerations to take into account. For joint filers, the income threshold for new electric vehicles is less than $300,000. For single filers, it is $150,000. The income threshold for used cars is essentially $150,000 for joint filers and up to $75,000 for single filers. For EVs, there are comparable pricing requirements. An electric vehicle, EV, that is an SUV, truck, or van, may cost as much as $80,000. Above that amount, cars or EVs are not eligible for the EV tax credits. It can cost up to $55,000 for smaller cars. Only used EVs up to $25,000 in price are eligible, provided that the dealers sold the used cars. The first time the automobile is resold is the only time an EV tax credit can be applied. There are a few more intriguing factors for the electric vehicle industry. Among these is the requirement that, by value, a specific portion of battery components be produced or assembled in the United States by 2024. The percentage of battery components that must be produced or assembled in the United States must essentially begin at 50% and gradually increase to 100% in order to be eligible for at least half of the tax credit. However, battery minerals are covered by the other half of the tax credit. A specific proportion of the minerals used in batteries must either be recycled in North America or come from a nation with which the U.S. has free trade agreements. 40% by 2023, 50% by 2024, 60% by 2025, 70% by 2026, and so forth would be the goals. Furthermore, some limitations apply to all battery metals and components originating from entities of concern. Having said that, how, if approved, would this tax credit affect the demand for EVs? Initially, this tax credit may be used to request a dealer rebate. It can be used, to put it simply, as a down payment toward the cost of the car. It is preferable to all of the prior federal tax credits, since it would not need you to wait until you file taxes, unlike the current system. More than that, if the filer meets the income limits, it can save EVs up to $7,500. What do you think about the current pricing of Tesla's stock? Please share your thoughts with us by using the comment area below. For more content about Tesla stocks, don't forget to hit the like and subscribe buttons. Should the Inflation Reduction Act of 2022 become law, there could be a significant increase in demand for electric vehicles. Nonetheless, when the law moves through various government departments, certain provisions will inevitably be modified. Of course, if the next leader wants to, it can be scrapped completely. Now, if the new EV tax credit is approved, how will it impact Tesla? All fans of the top EV manufacturer are aware of the manufacturing problems caused by supply chain disruptions brought on by the global COVID-19 outbreak. It's no secret that Tesla hasn't been meeting its delivery targets. If this measure is passed, though, things would be different since it will create new demand and could potentially result in price rises. The wait times for Tesla vehicles wouldn't be exorbitant if and when that occurs. Moreover, it might motivate Tesla to rescind its plans for U.S. manufacturing expansion and accelerate the release of new models. Long-term, the new EV tax credit may raise demand for all EVs, including Tesla cars, even if Tesla does not absolutely need it to maintain its 50% annual growth ambitions. In particular, it would result in higher car pricing for Tesla, higher gross margins, and higher operating profits. Nevertheless, if approved, the new EV tax credit will benefit the business. Positive news about Tesla is always excellent news for the company's stock. This implies that the beneficial impact the bill will have on the business will be reflected in the stock price, which will undoubtedly satisfy investors. In actuality, according to Chamath Palihapitiya, a Canadian and American entrepreneur who was born in Sri Lanka, CEO of Social Capital and a successful businessman, Tesla's stock is expected to double or even triple in value in the coming years. According to him, this is consistent with Tesla's present position in the stock market. Furthermore, as a result of an interview with Kelly Evans of CNBC, Palihapitiya revealed that Tesla's integrated trade proposal is a 5-year convertible bond that has the negative risk of a bond, but permits 95% of the possible upside of stocks. He sees this as a call option for one of the wealthiest businessmen on the planet. He continued by saying that the convertible bond yielded 5.5% when he first started purchasing it, and that, as he considers Tesla CEO Elon Musk to be a friend, he is ready to place a wager on the businessman. Evidence, however, indicates that Palihapitiya is a wise investor and does not tend to gamble based only on the recommendation of a close friend. This suggests that he believes in Tesla's stock prospects, not simply his pal Musk. Palihapitiya is one of the seasoned and well-respected financial gurus who thinks highly of the Tesla brand and its ability to perform above expectations. Indeed, they think Tesla is headed toward demonstrating precisely that. Tesla continues to be the top electric vehicle (EV) manufacturer dominating the market. Even so, a plethora of rivals are attempting to follow in its footsteps. For more of this stuff, check out Tesla stock and our other films.